Hello! So fund managers are resorting to AI to decode a Fed chair who refuses to speak. Banks are posting war bonus profits. And if the straits close into 2027, UK inflation could hit 6.5%. It's Wednesday the 5th, I'm FxPlew, and this is the Market Brief. And Bertie's joined me this morning, so you might see him in the background. Now, we touched on this yesterday, but EY has refined its outlook for the UK. The headline was 0.9% growth this year, but that does assume the straits reopen by the end of Q3. There were actually a wide range of possible outcomes, including the stagflation risk at the opposite end of the spectrum. If the strait stays closed, UK GDP could contract to 0.2% next year, and inflation could hit 6.5% by year end. That would clearly need rate hikes at a time that the economy is crying out for rate cuts to foster some growth. However, their base case is more manageable. The middle ground is where inflation is up to about 3.5%, but rates stay on hold at 3.75%. There are calls for Healey to impose a windfall tax. Some critics are calling the latest round of eye-watering profits from the banks and energy companies a war bonus. The grown-up view on a windfall tax is considerably more nuanced than the enthusiastic Labour MPs would have us believe, though, and it may not be the solution. However, Healey does need to find $15 billion for the defence investment plan, and he did resign over the funding row, so perhaps this will be the starting point he chooses to kick off from. Over in the US, fund managers have built an AI tool to help decode Fed Chair Warsh, who has gone dark on forward guidance. You can't make this up. Warsh said that rising bond yields have provided some comfort and that the markets have done quite a bit, which implies that the Fed does not need to act yet. But players in the bond market have called this an abdication of responsibility. We have ADP employment data out today. That will shine a light on the private sector ahead of non-farm payrolls on Friday. There are mixed views on the impact of AI in terms of employment. Some fear that it will have an adverse effect on employment, especially where it's estimated to be driving about a third of US economic growth already. Others feel that investment and development, like the data centre construction that's going on, may help prop up the numbers, certainly in the short term at least. In the market, cable is fairly flat this morning. Sterling kicks off around 134.50 against the dollar. We're fairly flat against the euro too, around 116.65, and euro dollar is up around 115.30 on the open this morning. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.